Hello, everyone. I'd like to welcome you. Unfortunately, we can't be with you there in the classrooms today, but we'd like to virtually welcome you to a presentation called Banking on Your Future. Some of the topics that we're going to discuss today include budget and finance management, identity theft and some tips, and some options on e-commerce to help protect yourself. My name is Chris McCarthy. I'm Senior Vice President and Central Group Area Manager at Univest Bank and Trust Company. Joining me today with the presentation is Tyra Elsner, Vice President and Financial Center Manager at our Franconia location, and Crystal Smith, Vice President and Financial Center Manager at our Hilltown location. The program that we created, Banking on Our Future, was designed in concert with feedback from some school administrators and students like you in the local area surrounding Montgomery and Bucks County. Over the next 30 minutes, we'll be covering some of the topics that will help you understand banking from a different perspective. At the end, we will open it up to any questions that you may have. On the right-hand side of your screen, there's a Q&A box with a drop-down menu. Hit the drop-down box there, and you should be able to enter your questions at the bottom of the screen and hit send. And then we will answer any questions at the end. We'll remind you again later on. So with that being said, let's begin the presentation. I'm going to turn it over to Crystal Smith.
Good morning. What are your dreams? It doesn't matter if you're going to go to college or if you're going to a trade school or directly into the workforce. Everyone has a dream about where they want to go. The best way to get there is to use the skills taught in business classes and to add practical, real-world advice and to make sound decisions. This is a formula for success. So we're going to talk about effective budgeting. So first, you need a budget. Developing a budget is pretty simple. What is coming in versus what is going out. And the trick is how to manage it. Since we're virtual, I can't see a show of hands, so I want you to ask yourself, do you think debt is good, and why? Or do you think debt is bad? Also, why? Surprisingly, there is no right answer to this question. Debt can be good and debt can be bad. There's different reasons for taking out debt. However, you do need to match your budget to the right type of debt, and this is important for your financial future. Now let's look at some types of debt. There are a couple different types of loans. There's a fixed loan, which is more of a one-time usage. You have a set payment. You have a set interest rate. And some examples of that are auto loans and home loans. You also have what's called a line of credit, which is something that's revolving, similar to a credit card or a home equity line of credit. Payments are based on outstanding balance. You only pay interest on what you've borrowed, and your interest rate is variable, which means it could go up, it could go down, depending on the published prime rate. Let's talk a little bit about secured versus unsecured. So your unsecured loans are going to be not having any collateral whatsoever. So they are taking your credit score and they are basing their decision to extend credit to you solely on how you previously paid bills, which is why it's always good you want to maintain a good credit score. You can also use collateral, which a good example for you all would be a car. When you get a car loan and you're using your car as collateral, the car essentially, they can come and take it away from you if you don't pay your loan. They will drive to your house in the middle of the night and take the car if you don't pay. So you always want to pay your car payments on time or you won't have a car for very long. The next thing we're going to talk about is educational loans. There are a couple types. You have your subsidized loans, which the government pays interest while you attend school, and it has a maximum period of 150% of length of program. So 4 years of college equals 6 years of subsidized loan. You have your unsubsidized loan, which the interest begins to accrue when the loan is taken out. Alternative lending, additional funding on top of financial aid to bridge the gap in price. Repayment terms differ by each independent organization. You can also get grants. These you don't pay back. These are considered a gift and is a type of financial aid based on financial need. Scholarships. These are much like grants and are a form of a gift that does not need to be paid back as long as you meet obligations associated with scholarship, usually based on merit, such as good grades rather than financial need.
Let's talk a little bit about debt as far as Crystal had mentioned earlier, what's good debt and what's bad debt, and what's necessary debt. Good debt, college debt, it's something that you're going to get a perceived value from in the future. A mortgage would be considered something that would be good debt. It's something long-term that you're going to earn equity in. What's bad debt? Bad debt would be something that doesn't provide a long-term use. Example, I would love to have season tickets to the Philadelphia Eagles, but if I was going to pay for my season tickets on a credit card, I'm going to be making payments on that debt well beyond the end of the season. So the payments then the use of the product has been used up well before the actual item is used. Let's talk about a couple of credit pitfalls. Avoid making lavish purchases just because you have the credit line available. Just because you have a $2,000 or $3,000 credit card doesn't mean you need to go out and spend and get the nicest camera or the newest phone just because it's out there. Make sure the repayment terms that you have allow for paying down balances quickly. When you max out your line and you have the inability to pay it down, it negatively impacts your credit score. In addition, store cards, you have your Best Buy cards, your Macy's cards, and stuff like that. Those cards typically carry a higher interest rate than traditional credit cards. So your interest rate could be upwards of 20 to almost 30%. And if you're only making minimum payments, you're going to be paying for your items that you purchased well beyond the actual usage of those items. You also don't want to exceed suggested utilization levels. Many say, and there's no set example, that if you go beyond 35% of your available balance, that it negatively impacts your credit score. When you're using credit to pay for things, you really need to look at structuring your wants and needs. What do you absolutely need, and what is just something that you would like to have? This doesn't mean you can't make a purchase for what you'd like to have, but you have to make sure that you have enough money budgeted in to your individual budget that allows for that payment. Title loans and payday loans. You'll see ads on TV all the time if you need a payday loan to get a bill paid before you get your payment. These, while they are funding options, are not ideal because basically what you're doing is you're just taking an advance on your paycheck. Then when your paycheck comes in, that money's already gone, and it just tends to spiral out of control. Title loans. If you use the title to your vehicle and you go to make a payment and you miss it, they're going to repossess your vehicle. That's why they use the title. You're essentially signing away the ownership of the car. Too many cards versus debt to income. The more cards you have, the more outstanding the balance is. Even though you don't accrue a balance on the cards, if you have a $5,000 card with a zero balance, whenever you apply for credit, it's still going to count as $5,000 of extended credit towards you, even though you didn't make the purchases on the card. Deferred interest versus deferred payments. Buy now, pay later deals. You'll see no interest until 2021. Well, that's true if you make all of the payments on the actual products that you're purchasing before 2021 starts. In addition, what it will happen would be if you are 1 day late on any of the payments, the interest is going to be accrued back to the original purchase date. So then you're going to owe all of the back interest plus the current interest, and then you lose that benefit. So some tips. You really need to understand, do your homework. What's the best product for use of purchasing? Obviously, you don't want to, credit card isn't the best idea to use to buy a car, but there are credit limits out there to allow you to do that. You want to match what you're using, and talk to your tax advisor if you need to. Understand the best time to make large purchases. Typically, they say the best time to purchase a new vehicle is when the new models come out, and they're trying to get the old models off the lot. So when the 2022 vehicles come out, try and get the 2021 models that are left over because they're trying to reduce that inventory on the lot. I also say when you're going away to school that July is the best time to buy a computer because computer prices are lowest. It's also important to get funding in place prior to budgeting your expenses if possible. It allows you to know what you can afford. The current market for the housing market is if you don't have a pre-approval for an amount of money when you're going to look for a house, you're not going to get a house because there's so many people out there looking for houses right now because rates are so low. And also use debt management tools to maximize your payback methods. There's plenty of information on the internet where you're going to be able to plug all of your debt in, and it's going to tell you that if you have excess money, what you should apply that money to in order to reduce your debts the fastest and repayment of your debts the quickest. So whether you're furthering your education, you're just going right into the workforce, or you're just going to live off savings, you still need to know and focus on your spending and debt habits, whatever your future holds and whatever strategy you apply. It's very important that you have some type of savings in case of an emergency, and it's also important that you know what you have incoming so that you can, in terms of income, so that you can pay your debts when they're due. So we talked a little bit earlier about debt to income and why that's important. When you're applying for loans, financial organizations use debt-to-income ratios to determine the ability to repay your debt. In most cases, you have to prove sustained income in order to qualify. Many institutions use a typical debt-to-income of 45%. So that means that take your annual, say you make $100,000 a year, you're only going to be able to have up to 45% of debt. It's very important that when you're stating information, though, that you are being honest. On credit card applications, it's just stated income. It doesn't always ask for proof. So the most important thing is that when you're applying for a credit card that you're truthful as to your actual income, because that will put you in line as far as for your risk through the organization with a credit limit that will match your income. If you overstate your income and you get a line of credit that's too large and you make the purchases, the likelihood that you could default on the credit and reduce your credit score is higher. So let's talk a little bit of a brief example. So you're out of school, albeit either high school, college, or trade school, and you get a job for a $60,000 a year annual salary. Pretty good income to start. You had to move because the job's out of the area and your rent's $1,000 a month. You have an educational debt, which Crystal talked a little bit about repayments earlier. And let's say you have two credit cards. Both of them are 15.99%. One has a $10,000 fully advanced balance and a $10,000 limit, and one has a zero balance and a $10,000 limit. Now you need to lease a car in order to get to work. So let's look at your total monthly debts. Your rent's $1,000. Your educational loan is going to be somewhere in the range of $300. Your first credit card, based on a $10,000 balance, the lowest payment that you could possibly make would be around $400. Credit card 2, even though you have a zero balance, you still have that credit extended to you, so the banks or any financial institutions are going to look at this as though you have a fully advanced balance of $400. So your monthly bills now are $2,100. So based on that, you have $60,000 a year. Your monthly salary is roughly $5,000. At a 45% debt-to-income ratio, their financial institutions are going to allow for roughly $2,250. Your total debts are now $2,100. Now you have a total of $150 available for a car. So the chances that you were looking to get that new Mustang or new Jeep Grand Cherokee, those lease prices are well beyond that. And you have to also take into account when you think you're looking for the vehicle, if you're looking at the commercials on TV where they say it's $99 a month, the fine print is that you're putting almost sometimes $6,000 or more down at the inception of the lease, because all you're doing is putting money down to reduce your payments. The money equates to the same. Now we're just going to switch gears just a little bit. We're going to position over to talking about some identity theft. And obviously, the people on the screen here, what do they all have in common? Robert De Niro, Oprah Winfrey, Steven Spielberg, Tiger Woods, Will Smith, and Kim Kardashian. They all have been targets for some type of financial scam or identity theft. It's become very common, and we're going to talk to you now about a few tips and some things to look out about. With that, I'm going to turn it over to Tyra Elsner.
We are virtual. Can everybody hear me? Since we are virtual, how many times will you answer yes to the following questions? Okay, ready? Have you ever paid for something with a debit card where you had to swipe the card? Paid or bought for an item over the phone or your laptop that was not on your home secured Wi-Fi network? Okay. Have you ever received an offer in the mail and you just threw it in the trash? You weren't interested in it, you just tossed it away. Have you ever used an ATM to take money out of your account? Do you keep your debit card or your driver's license attached to the back of your phone, like in one of those little carriers? Have you ever left your wallet or purse in the car while in the store or while you're at the gym? Have you ever thrown out a pay stub without shredding it? Have you ever accessed a free Wi-Fi network when you were not at home? Did you ever post something on social media that shows personal information, or have you ever discussed personal information like your birthdays, your celebrations, your pet names over social media? Do you have a social media account now? Or did you have one in the past? And lastly, have you ever shopped online? Ever used Amazon? So as the world continues to move towards all things digital, which we are seeing now in today's world for sure, the information that we upload into the web is increasing. And so naturally, identity theft does the same thing. It increases. So let's take a look at some current numbers. Sam Cooke, who's a journalist, he wrote some identity theft facts from 2019 and through 2020. 13 million people fell victim in 2019, and it cost them over $3.5 million out of pocket. That's up 13%. The fraudsters are fast in their efforts to take over accounts. You know, they can get a hold of your information, and within moments, within actually 24 hours, the criminal can have access to your account. Credit card fraud is the top reported type of identity theft in 2019. That's 271,000 reports, and they're just the ones that we know about. 87% of consumers have left their personal information exposed online. Identity fraud is up 46%. Over 650,000 reported instances were reported in 2019. And it's the largest share of fraud reports, followed by imposter scams, people who are just impersonating other people. In 2019, over 14,000 victims were of the age of 19. That's 1.3 million children's records are stolen every year. Social media users are at a 30% greater risk of being victimized. 43% of online shoppers admitted to using public Wi-Fi. 79% admit to sharing passwords, which only increases the vulnerability of you. And according to LifeLock, the average amount of time spent recovering from a stolen identity is around 1,200 hours a year. So let's put that into perspective a little bit. An average work year is 40 hours per week, so that's 2,080 hours. So 1,200 hours is more than 60% of your time trying to just get your money back and your identity back. That's a lot. So moving on to current trends in identity theft and fraud, we have your COVID catfishing scams, you have your contamination scams, your Cash App scams, grandparent scams, lottery and advertisement scams, mystery shopping, Craigslist, employment scams, romance scams, card skimming, what we call phishing, which is an email scam, and smishing, which is your texting verification scams. You have Western Union that are scamming, computer hostage scams. So there's a lot going on out there that gives you vulnerability to getting your ID stolen. But how can you prevent all of this? And I'm sure all of this is overwhelming. How do you protect yourself? So you never provide information over the phone or text or email. Keep everything safe and secure. Guard your mail and guard your wallet. Do not leave it in the car, especially if you're going to go to the park or, walk your pet or go to the gym. Make sure you take it with you. Don't throw away any of your ATM receipts, your credit card bills, your bank statements, your tax returns. Don't throw that in the mail. Anything that has documented personal information, make sure you securely shred it. Do not use the same password for everything. In fact, use a passphrase. It's a little bit more secure. And never write your passwords down. Keep them up here. Financial institutions, we all have your personal information, so we will never contact you to verify that. So don't get caught up in that either. We know what we have for you, and we will never ask you to verify that. Be careful on free Wi-Fi networks, and beware of offers too good to be true. Usually if they're too good to be true, they are, and they're just there to get your attention and grab your information. Don't ever be pressured to make quick decisions for easy money. That's always a bad sign. And use your banking technology to use your products that are out there, your online banking, your internet bill pay, and also stay informed about your account information. Make sure you know what's in your account, what's coming in and coming out. And you can actually check your credit bureaus to get your free annual credit report every year. So make sure you do that too. All right, back to you, Chris.
Thanks, Tyra. And just to reiterate some of the things that Tyra said, one of the things that we see quite frequently with our younger population is, the mystery shopper scam or a scam where they're sending you information and they send you funds and immediately say, oh, I sent you too much, I need you to send it back. Think about that. They wouldn't send you more money and ask you to send it back. It's a scam. As good as it seems at the time, you have to think about it logically. If they're asking for your information, oh, I'll put money in, just give me your online banking information. Don't do it. They're there to take over your account. As good as it sounds, and just make it easier. In the end, it's just going to hurt a little bit more. So you really need to take a step back, think. If you're unsure, ask someone else if it makes sense, or contact your financial institution. We're here to help and to prevent that information. While we're talking a little bit about prevention, there are things out there to keep you informed from an e-commerce standpoint. Banking technologies. At this point, pretty much every bank out there has a technology suite with different products and services that can help you monitor your account, keep your information safe, and keep you informed, whether it's daily alerts that you can get through text or alerts that if your account gets below a certain dollar amount, it'll tell you, or as soon as a transaction comes through, it sends you a text alert. That information's available. You have all that at your fingertips. And the more informed and aware you are of what's going on in your account on a daily basis, the more likely that your account is going to stay safe from fraud. There's also alternative payment methods. There's the Zelle network that banks can subscribe to. There's Venmo. Now, in the COVID world, you're seeing a lot of stores that aren't taking cash now. They're shying away from it. There was a coin shortage. They're they're saying that they would like either cashless payments or cards. And if you don't have a card and you have the cashless payment, Apple Pay, Samsung Pay, Google Pay, whatever it may be, that's a little bit more secure. Basically what that does is it creates what's called an RFID protection. It's radio frequency identification. There's no card numbers that are transmitted, so your card number stays safe. Essentially what it does is it uses a radio frequency that's can only send from your actual device to a short range to the device that it would be accepting the payment. So if you're more than a couple of feet away, it's not going to conduct the transaction. So it keeps your information safe. It keeps all of that protected. So those are some options that you have in order to make payments to keep yourself, not a victim of fraud. And also then emails are sent to you that the transaction was completed. So with that, we talked a little bit about everything as far as some budgeting, some tips on identity theft, some e-commerce ideas. With that, I like to say the Q&A section on the right-hand side of your screen is there, that drop-down box. If anybody has any questions, if you'd like to enter them now, we'll answer any questions that you may have, and then we'll give you a few moments to do so, and if not, we'll adjourn the session. So it looks like at this time we don't have any questions. So, just on behalf of, Tyra Elsner, Crystal Smith, and myself, I'd like to thank you for joining in and listening today. If there's anything that you would like more information on, or if you have questions at a later time, or just want more information in general, please feel free to email Tyra at elsnert@univest.net, and we'll make sure that we get you the sufficient information or help you with your topic. So with that, I'd like to say thank you for joining today, and everyone stay safe.